Welcome to TradeTheMBI.com. This is John. This report is for the 26th. Well, if there was ever a reason you wonder why I mark certain things when I do, it's because they have a specific reason. We talked about this positive extreme the other day. The expectation was, given the readings, that we would come down and fill it. Well, guess what happened? Yeah, sure, there was a bump during the day, but that's normal within a giant move down. You would expect at least to move back halfway up to, well, a third to halfway. Under particular weakness when you can get that. But in this particular case, we came right to it, and guess what? They started to support right off that spot. And, it's from the DOC here. You have that steel, the short-term buyers was enough to keep things from imploding even further, but that doesn't mean that it's done. Yes, there's been a bit of a drop here to start the day with MBI white, but it's too early to see where that's going to end up. But at the end of the day, you still have magenta under yellow, and if that converts and switches, then we'll have a pretty clear idea of it. Potentially, you could have also MBI blue here crossing over the gray, which also would be supportive from a hold standpoint. And again, this is part of that volatility that we were expecting because of the uncertainty situation with election and everything else, simply because of the changes, and nobody really quite certain how this is going to work because it really hasn't happened before. It's quite an interesting circumstance. So it is what it is. From an NQ standpoint, it already cleared that we dipped down to and filled the yellow extreme right down here. And that's as close to, it's just the edge readings right before you get to a positive extreme, and often those do fill in. And when we look for weakness, that's where I tend to look for those. When you get the cyan color is not as relevant, and then the green ones definitely support a more bullish move. And of course, the dip below the red line, which are the magenta ones, that suggests continued new lows. And guess what? That's exactly where we're at least from the NQ standpoint there. So none of this really all that out of line with the expectation from the readings, at least. From a treasury standpoint, again, it becomes a difficult one. Do you go to the sidelines and cash, lose money that way via treasuries, stay on the sidelines, or do you, push to a commodity or cryptos? My whole view on these, when volatility rises, is the time to be involved in the trade, simply because we know the general direction. It's not a time. A lot of people just want to turn off during that, and those are the great opportunities that are missed because you don't take advantage of that high volatility, especially when you know where it's leading. From an oil standpoint, again, pushing back up, and again, we already saw it. The CPI print preliminary stuff coming through much hotter than expected, and that was obvious from what we saw developing in oil over the last, coming through June all the way into July. So, yeah, that they, I love it when you see this headline. So, surprise, a hot print. Really? What was the surprise about it? It's not that hard to follow. Some pretty basic stuff. And the euro, of course, just floating around and being supported in this range. And this has been a continuation for quite some time because they're really desperate to keep it within there because of the insolvency of most European banks. Any worse for the euro, and it really gets hard. When they dip down on that 106 is panic time. Anything below that, which is where it should be, below par, but it should be and is. That's where you have to live in the world of reality versus what things should be. You should be able to pick the candidate that you want to run as opposed to them being appointed. But hey, we're in a new reality. From a gold standpoint, that sell-off certainly creates a dip, but it's still going to be coming back. Especially when you see again like the CPI numbers, and that it's just going to be the hedge against, because where else are you going to go? Your other choice is to move into crypto. Bitcoin's still doing well. ETH not performing quite as well as Bitcoin is, but from a relative standpoint, they're fairly close. So you see all of that. So from your commodity crypto exchange, pretty close to equal. So the dip came through here from the intraday. We continued a little bit lower into the pre-market. Then as the market opened up, we saw some solid turnaround once we got over that 23%, which becomes the critical. And then there was the nice little spike, but we started making successively lower MBI peaks here. And then once it dipped below the 33, taking place right in there, went for the short at that particular point because that was the cleanest when you had the move up of the MBI white. And sure enough, cascaded all the way back to the 0 point. A little bit of a bounce back here, but still, well, you have in this case magenta over yellow, even though white's leading. You got to see it tip down in that for that to fade off, but pretty clean. I mean, talk about beautiful from an intraday standpoint. Your ranges, over 60 points to the upside, back to the downside. That's brilliant. That's brilliant stuff. And when we look at it from 5K, or at least a 5 minute chart here, super clean. So you had from the minute the cash opened, they tried to, plunge protection team jumped in there. They can only go so far with it. You can see that the positive extremes developed. It was pretty early on, right in the midpoint, and then as soon as the selling started, filled those back, and then went to see if there were any additional stops, and there were. That was some of the yellow prints on positive extremes, which were right down here, and then further at the very beginning of the breakout. These were also very close to positive extreme, and filled it all beautifully. And then by the end of the day, you're at the lows, and then they wait to the post market to buy back a little bit. And that's kind of where we're at here in the European session. Let's get that to where we can see the relative. There you go. So it's just a move back up, relatively close to a halfway move back in between there, but getting compressed. And so there's going to be some volatility again going into the next day. And I would just suggest that don't be concerned with that. It's great opportunities with this kind of volatility. It's just you have to be a little more fluid, and it's not one of those buy and hold or sell and hold situations. You have to stay active with it. So that's the long and the short of it. It's exciting times. So trade well and enjoy this. Have a good one. Anything relevant, I'll put it in the Skype chat. Have a good one.